and I'm happy to be here with everyone and looking forward to this discussion.
Thank you. Hi, Glauco.
Hey, Maureen. Hey, everyone. I'm Glauco Sampaio. I'm from Brazil. I'm based in São Paulo. I'm the Chief Information Security Officer, Privacy Officer, and also Fraud Prevention Officer here at Cielo. Cielo is the biggest acquirer in payment systems at Brazil. I'm in the cybersecurity space for more than 20 years, running as a CISO for more than 10, and at Cielo taking care of the whole cybersecurity strategy, and including the cyber insurance issues. So that's it.
Thank you. Jacob, hi.
Hi, thanks for having me, first of all. Looking forward to the discussion. Jacob Ingerslev happened to be on this webinar a year ago, so a lot has happened since, for sure. My role is heading up cyber and tech underwriting at Tokyo Marine HCC. It's a member of the Tokyo Marine companies, and I've spent just over 20 years in the insurance industry, and I would say cyber insurance has been the majority of it for the past 10 years. Very exciting field, and looking forward to hearing everyone's experiences and viewpoints. Thank you.
Thank you. Keith, hi.
Hi, everyone. My name is Keith Tagliaferri, based in the United States, and I'm the Director of Cyber Claim Practices at the Hartford. So my role is twofold. First, I'm responsible for end-to-end oversight of all cyber-related insurance claims across the organization. And I'm also responsible for overseeing the organization's cyber risk mitigation strategy and solutions, which we make available to our commercial insureds as part of their cyber insurance coverage. And so in addition to the past several years in the cyber insurance industry, I also come from about 20 years of overall cyber defense and cyber operations background, where I previously led large security teams in collecting cyber threat intelligence, defending both large and small organizations from cyber attacks, and then, of course, responding to cyber attacks in the form of incident response and computer forensic investigations.
Thank you. Okay, so we're going to divide today's event into 3 topics: market and technology overview, challenges and risks, and solutions and approaches. Our first topic is a brief overview of the market and technology. Adam, what's the current state of the cyber insurance market, and what can we expect in the year ahead?
Yeah, thanks, Moran. For those of you, and especially Jacob, who was on here a year ago, probably talking about the hardened market conditions that exist. And while still prevalent, we're seeing a little bit of a softening of the market. You're seeing some stabilization of premiums. You're seeing better control points from the underwriters. You're seeing the results of tightened coverage over the last year or two. So with that, there is a stabilization of pricing, and cyber losses seem to be coming down. So, I mean, that is the good news. The cyber insurance market value is looking somewhere around 13 billion in 2022. They're expecting that to get upwards of 17 for this year. And they're still looking at an annual growth rate, a compounded annual growth rate of about 25, 26%, which gets us close to about 85 billion by 2030. What all that means with those numbers is that there's obviously still big expectations around the potential for cyber insurance in this market, and we are still nascent in and of that. So there are some positive signs and signals that we are turning a corner, but really kind of underneath all of that, a lot more looms when you think about what kind of lies ahead. So the higher the demand still sits, supply is starting to open up with capacity. ILS players are coming into this space, so there are alternative capital markets. But what kind of sits behind all this? There's been talk about ransomware dwindling down a little bit and not seeing as much of the growth that was prevalent at the onset of the war in Ukraine. There are some signals, though, that will continue to be a problem and most likely pick up again in the year to come. So some of the challenges that existed during the hard market cycle with underwriting will still remain. most likely, as we still haven't really fixed the underlying issues with how to effectively underwrite risk, and especially with ransomware. So in addition, you'll see supply chain attacks. These will continue to be more prevalent alongside ransomware. And then when you look at a lot of the new tech that's out there, AI, there's been a lot of conversation around ChatGPT and the effects of that on cyber insurance. So that'll certainly be a course for conversation. And of course, just the overall expansion of the attack surface, right? That continues to exponentially increase year over year. The adoption of connected devices, IoT, OT, looking at all these different areas. And of course, what does that mean for us on the reinsurance side is really, new vulnerabilities, continuing dynamic nature of the evolving threats, and really more openings for systemic and aggregate risk, which is really where we focus our attention on and what that might look like. So, the human factor is still prevalent, even in the face of ransomware, which drives most of the cyber claims. But a lot of the event triggers that even lead to the ransomware come from that human factor element. So phishing and social engineering, and ultimately business email compromise. Right. So all of these factors are still heavily in play here. So the good sign is that we seem to be turning a corner a bit. From my perspective, though, I think it will be short-lived. I think we will kind of stabilize. So you're seeing price increases now entering the single-digit phase, which is great news considering where we were at in triple digits. So all positive signs going forward. But lurking underneath it all is still, between the geopolitical landscape that we're sitting up against, elections coming up, and other events, we could easily see, a ratcheting up of some of the underlying issues that really led us into the hardened cycle.
Wow. Peter, hi.
Good afternoon. Can you hear me okay?
Sorry?
Can you hear me okay?
We can hear you, but we cannot see you. If you could turn on your camera and
there we go.
Yourself.
I'm in a car.
It's fine. If you could briefly introduce yourself, and then we'll get back to the discussion.
Sure. Peter Rosario, CISO for USI Insurance Services. We're a mid-market firm spread out across the United States, about 11,000 employees globally.
Thank you. Okay, Dan, how has the process of becoming insured changed over the years? Well, specifically over the past 10 years.
It's a great question. I think that, and kind of how involved you've been as a security officer. If you go 10 plus years ago, it felt at the time like a big hill to climb and a very disjointed interaction. So you'd be given maybe this very large spreadsheet with dozens or maybe even hundreds of questions, and you'd answer those, and you get on a phone call with multiple carriers, and it might be a couple of hours of Q&A. And then from the CISO perspective or security officer perspective, it seemed like everything just kind of stopped and went away, and you probably had some misgivings about what you had to say about your organization in the interview. You didn't know what would happen, and then your organization's chief risk officer comes back later and says, "Oh, good job, we got coverage." And you're kind of going, "Wow, I don't know how that happened." It felt like you just threw a bunch of stuff into a black box. Something happened, and at the time, what was covered and what was included was very black box feeling, where I wasn't going to find out what was included until we had an incident, is the way it felt. And now, and then during the interim periods of renewal, I didn't really know what would happen. I didn't know if anytime we ever called the broker, if that was going to increase our rates. And so it was challenging to understand. And today what's evolved is the brokers, and you guys have heard all the carnage, and I think Adam just nailed this in the intro about what's happened. There was that big inflation of premiums and concerns about what's covered and not covered. And I think that the brokers had to become more interactive and involved between the carriers and the insureds, because it was so tough to glue all that together and get a handle on what should premiums be, what should rates be. And so I think the brokers now are becoming more involved, gathering more data, advising clients better on what a good insured candidate looks like. And so I think that's helping, it was Adam mentioned, helping kind of bring a little bit of stabilizing into the rates for premiums, and also the insurers are just providing more ongoing during that year or two of coverage. Can you improve? Can you deploy that control? Can you improve this control? And trying to help organizations be better and more informed about what they get. Hey, maybe you get a free cyber incident tabletop exercise out of this. You should do that. Take advantage of those things. Don't be shy about it. But I think that interaction of now as a CISO, you're given more tools to use, and I think that's been a huge difference that's happened from my experience 10 plus years ago when I did my very first call with a bunch of carriers. So
well, yeah, in 2021, ransomware, for example, ransomware attacks accounted for 75% of all cyber insurance claims. So insurance companies reduced their cyber insurance coverage and raised their premiums. So it constantly changes. And maybe we're heading towards calculating premiums according to how secure you are.
good.
Okay, so now I would like to ask you, Keith. I just mentioned ransomware, but is that still one of the most common types of cyber attacks, or it has changed? What are the most common types of cyber attacks businesses face today? And what carriers tend to see in cyber insurance claims?
Yeah, so as we talk about a hard market or a soft market and sort of premiums being raised and limits on insurance being lowered and those things, the most common levers of those obviously are the attacks that we're seeing and the risk posed to the businesses that are being insured. And it's been interesting the past year or two. There's been a lot of things that have remained exactly the same, and then there's been some things that have changed as it relates to the threat landscape. I think some of these have been kind of mentioned already as it relates to the market trends. But as far as things that have remained the same from a claim perspective and sort of threat landscape perspective, the types of attacks and sort of the ultimate goal or sort of the payload of the attacks really generally comes down to three attack types, right? It's going to result in either a ransomware attack, a business email compromise scam, or data breach. There are, of course, other resulting types of attacks out there. Those tend to be anomalous. Those tend to be a little bit kind of pushed into a category that I always kind of call other. If it's not ransomware, BEC, or data breach, it goes into this bucket of other because there's so many other different factors. But when you're looking at the frequency of cyber attacks, what are the most common ones that we're seeing, and also severity in terms of if you're going to have an incident that affects your business and it's going to cause a high amount of loss or business interruption to obviously to your business, it's most likely going to be one of those three, and that's the way it's been for several years now. What's changed the past year or two has been a little bit more in terms of the proportion between those three of what we're seeing. So several years ago, I think everyone would recognize that data breaches were sort of, that's what was in the news. That's what the threat actors were focusing on quite a bit. And that's where a lot of the loss and severity was coming from. It was from these, especially these mega large data breaches. Then things started to 2018 into 2019 started to move into ransomware, and we continue to see ransomware kind of ramping up and sort of spiking all the way up into 2021. But as someone mentioned earlier, we really saw a drop in ransomware last year. And despite the fact that ransomware still made up a large portion of the overall claim activity that you tend to see in industry reporting, the overall proportion dropped quite a bit. And what we saw was sort of this increase in business email compromise, where all of a sudden, we saw this shift in threat actor activity in which these scams were kind of flying around in record numbers. And business email compromise, generally just a simple approach from the bad guys in tricking someone within, generally accounts payable, and paying an invoice or paying a vendor to a fraudulent account, or can sort of be reversed the other way around in some cases. And there's a lot of different types of spins and different approaches that the bad guys use as it relates to those types of attacks. But usually just social engineering attacks is what they are in most cases. But we certainly saw a shift over to business email compromise, and now sort of industry-wide starting to see a bit of a ramp up again around ransomware. Certainly not back to levels we saw 2019, 21, or anything like that, but starting to slowly see ransomware pick back up a little bit lately. So it's interesting to sort of start with those.
Well, is it because we're more prepared for ransomware attacks?
Yeah, and there are a lot of different theories that float around as to why we saw the ransomware drop last year. Probably the most prevalent is the war in Russia, Ukraine. There have also been global enforcement actions in which large organized crime, cyber organized crime gangs have been shut down, caught, servers apprehended, those types of things. And so there's been a lot of not only U.S. based, but global law enforcement actions. There's been a lot of sanction activity around some of the ransom payments and some of those types of things. And then there certainly has been an effect in terms of organizations having better backups and those types of things, where they don't have to be paying these ransoms if they have sufficient backups that are actually in place and work. So there's sort of probably not one contributing factor to that drop last year, but probably a combination of several.
So is it easier or more difficult to get cyber insurance today, Jacob?
Yeah, going back to this call a year ago, I think someone would have said, is cyber insurance even worth it? Will it continue to exist? It's gotten so expensive. Is there even value in this for me? And I think a year later we're saying, yes, there is value, and it's probably gotten a bit cheaper, and there are less questions asked, certainly in the small business segment. And but I think it's sort of meet in the middle, right? The customers have also upped their game a bit on the security control side. And then, as Keith alluded to, slowdown in ransomware, kind of Q2 and Q3 last year, slight pickup again in Q4, more pickup in Q1. There's probably also been a shift. US sort of was hit by the first ransomware wave, and then that transitioned a little bit more to international, and maybe it's coming back again. But either way, for the time being, easier, more value, I think, is the conclusion. And as part of that, seeing that value, I think insurers have also upped their game in offering more than just a policy. Sort of in a short way of saying it, helping insureds better mitigate the risk of a loss, or when a loss happens, helping them recover more quickly by having competent incident response firms handle the recovery process, helping them not pay that ransom demand when they shouldn't, because there's a pretty good backup, And even if the threat actors said they stole, a bunch of information and they're going to leak it, if they don't pay up, well, you should really still not pay up. So I think we've seen a drop in payments relative to extortion demands because of that. So I think there's a positive story all the way around. Of course, we have to look at being curious. We have to look at first, what's the positive story for us? And the positive story was that the cyber insurance market dropped to about a 45% loss ratio in 2022. At least if you believe the Fitch and Dowling reports and other reports that aggregate that sort of information. And it's fairly accurate. Most insurers have to report the cyber premiums and loss figures to something called the NAIC. So we have a pretty good insight into how we're doing and how everyone else is doing. So I think, it's worth underscoring all of this just fits into the usual patterns of insurance. It's not unique to cyber. All insurance lines of business go through soft and hard markets. And actually, cyber has kind of followed what was generally a hard market in the last 3 to 4 years, but in a more extreme way, we can say. I don't think other lines of business saw rate increases or price increases at 100%. But so we expect this. We try and share up the reserves when we can during the hard market or at the tail end of it, and then once the price softens, we hold on and sort of we have a good war chest, if you will. So I think insurers are prepared for it, and we'd all like it to be more balanced.
We have a question from the audience. Insuring cyber products is basically insuring a digital product. What do you think? Why do you think there isn't enough digital solution for preventative cyber insurance? It's not insuring cyber products. It's using cyber security to ensure data and it can be like personal data, sensitive information, your entire business. Glauco, maybe you can answer this question.
Yeah, it's really hard to think that we can be proactive and prevent everything. So we have to focus on being a balance between be preventive and be able to respond, be able to recover the environment. So we cannot trust basically on technology and be sure that we are done. We are not suffering without. We are not taking a ransomware or taking any kind of other instance. It's an illusion thinking about that. So we have to take care of the whole process. Taking care of. If you take a look on NIST, you'll see that we have to prevent, we have to monitor, we have to detect, and we have to respond and recover. And the last part is really hard. Most of the companies are not taking care of that part. They are more focused on detection, on prevention, believing that the technology will solve the issues, and it's not. So if you don't take care of the whole process, it's a trap for you. If you'll be hit by a ransomware today, you must be able to recover your business. And most of the companies taking a really long time to recover because they don't take care of that part. And even if you put a lot of money, a lot of efforts in technology and production to be preventive, if you be hit, you must be ready to respond. So that's what I really believe that it's the good part of seeing the whole picture of technology and the whole cybersecurity space. You have taken care of the whole parts.
And again, I would like to stress that we're not insuring cyber products. We're using cybersecurity to ensure our business. It's like, it's like having regular insurance. Only you can get hit by a cyber attack as much as you can get hit by a burglar.
Yeah, for sure.
Well, and it's even worse for critical infrastructure and maybe like healthcare organizations, education that can hurt all of us. Hank, which sectors are suffering most from cyber attacks, and what does that mean for insurance?
Yeah, let me give a little bit of a European perspective also here, because I think probably the only European in this panel at the moment. And it was mentioned already earlier that I think it was Adam that said, you know, the geopolitical climate currently in Europe is causing a lot of damage. Yeah, so we see a lot of bad things happening. I must also say that there's a lot of positives being aired in this call about, you know, we've come a long way from last year to now, but I see a lot of issues still that, you know, my customers are struggling with. For instance, one event that has come back, in my opinion, quite dramatically is the distributed denial of service attacks. We thought that we had that past us many years ago, but especially now with, you know, the war in Ukraine, we see a lot of organizations being attacked by most probably what we think is the Russian threat actors, and organizations that, you know, were not so well prepared. Especially, for instance, in the health sector, if you look at it in the Netherlands, they were pretty much damaged. So when we look at, you know, the top areas of cybercrime and cyber war, I would like to add, you know, DDoS as one, you know, above and beyond the ransomware. Another one that is playing besides the geopolitical factors is, you know, continued increase of regulatory compliance. So, for instance, the EU has adopted a new regulation that now has to be implemented in the next 2 years in the EU member states called NIS2, in which also, you know, board is going to be held liable and responsible, you know, for damage and cyber attacks, etc. Beyond the insurance. I don't think they can get away with insurance anymore. So that is another factor that is playing heavily in the field here in Europe. And as I started, the complexity of, you know, the cyber environment is constantly evolving still. Yeah, our business owners and marketeers, they constantly develop new ideas. Now with ChatGPT and all that stuff coming also on board, is making it even harder, you know, to control and assess the risks in a consistent manner, and, you know, in a I would say continuous manner, because getting a cyber insurance maybe for a year is nice, but what, you know, if 2 days later we make some changes to the environment and all of a sudden, you know, we open up big doors. What happens to your organization and what happens also for your cyber insurance. So those are a few, I think, area specific, because I can speak primarily or from my experience from a European perspective that I think are playing in the field at the moment.
Peter, there are a lot of regulations and requirements that many small, medium businesses cannot meet or do not have the means to keep up with. How can we help?
I think it was covered just previously, right? We see a lot more proactivity from the broker side of the community. At USI, we've got a whole complete analytics panel that we offer services to small and medium-sized businesses, right? And that was brought up. The application has changed, right? It's morphed into different areas, and we've got to help the clients meet whatever it is that they need to meet today. So if you're missing specific tools, if they're missing specific policies, we put them in touch with the right entities, partners that we've joined with to help them get over those hurdles and roadblocks, so that way they can get a policy to meet the needs of the carrier, so we can insure them.
We have another question from the audience. Where do you see the role of insurance companies in active risk controls as part of insurance policies? Who would like to answer this question?
I can jump in there, Moran, and everyone else can offer their perspectives as well. You know, we'll talk about this in a little bit, but the convergence between cybersecurity as an industry and cyber insurance, looking at public and private sector, and the collaboration and interactions are extremely important. And what was interesting in doing a lot of the research when we're developing products and services, even at Swiss Re, and looking at the small, mid-sized companies, one of the important elements that came out was the sentiment of small, mid-sized companies feeling that it should be insurance's responsibility, right? That if you're going to impose more controls on us, you should do more to be monitoring and helping us out to be compliant with those controls, help us close that insurability gap, right? And so I think as an industry, it is incumbent upon us to play a larger role in that. Now, how to do so in the implementation of that, of course, is much more difficult. But when I look at the evolution of cyber insurance product, the version 1.0 in the 2014, 15s was really about, it's a soft market and there is high demand, capacity was flowing. So it's how do you design coverages effectively, and try and educate the customer. And of course, then with the claims ramping up, and the shift quickly became to this 2.0, where it's how do you leverage data effectively. The 3.0 and the evolution of where we want to get to is really that marriage and alignment of continuous underwriting with continuous monitoring, right? And how to align them. And of course, again, that's much easier said than done, because then you get into a potential dynamic pricing element, which of course the insurance industry is not ready for, nor will we be prepared to take on for quite some time. But when you look at the coalitions and cowbells and the adaptive and active insurance and these sort of elements, you're starting to see that those elements come to life, of how when you do have continuous monitoring in the background, it's higher engagement points with your customers, right? And that's where insurance can really affect change with the help of security companies, or just taking on the ownership of that data themselves, to be able to create more touch points, more stickiness, so that in between those renewal points, there's an opportunity to increase your security posture, work on closing that insurability gap, lowering premiums, applying discounts, whatever that might be. Now you've got these touch points in between. So you're extending that customer journey to beyond initial application renewal. And now you're establishing a much tighter relationship, which traditionally doesn't exist, right? Nobody wakes up in the morning and says, wow, I can't wait to talk to my insurance agent. This is going to be awesome, right? And so now, though, you're really doing something to help their business. You're bringing something of value to them that is not just about necessarily the policy at the end of the day, but it is really working to help them out with that security posture and help out their business.
Another question from the audience: have the stronger implementation of laws like GDPR also been contributory to better systems in place, thus increasing cybersecurity? Glauco?
Yeah, I think that the enforcement of the law helped us a lot as a professional. I've been on that subject for long, and most of the companies do not put money or put efforts to raise the maturity, because they don't have any kind of obligation. Besides who works for financial segments or any kind of other market that have a stronger relation, just the companies just don't put money on that. And the laws here in Brazil, we also have a kind of GPR and LGPD, and after that, the companies are taking care of more about cybersecurity and more about the issues of talking about privacy and the control that we must have on this area. So I think that this helps us a lot. We gain more support, we gain more money for the cybersecurity budget, the privacy budget, and we are seeing an adoption of this in Brazil. Our law is not completely implemented, and we do have a bunch of issues to solve, and a lot of companies who is working hard to get a good maturity level, because they don't put money or put effort on that for a long. So in 1 or 2 years, they cannot have the maturity that they need it. So, but yes, it's helping and giving us support, the legal support and support for the board to increase the maturity and still keeping the company ready for the law. And it's clear what you have to do. So that's good. It's good of the law. It's not taking care of everything. You take a big framework to that. You have points, and you know how to start and what you have to deliver and what the process you must create and what you need to do in the end. So yeah, I think the regulations and the laws help us a lot.
If I can add to that, some negative impacts. So I think the law has one leg, right, which is you need to have better security, and these are the penalties if you don't have it. I think I agree with what was just said. Yeah, it's generally been positive. The other leg is the data collection piece. and I would say negative right now. It's become kind of the new hunting ground for class action lawyers in the U.S. Not GDPR, obviously, but we have our own versions, and it's a much more complicated web in the U.S. Of individual state laws and federal laws. So I would say, as we've seen ransomware ease off a bit, and maybe business email compromise fraud has stabilized a little bit, still going up, and data breaches have sort of fallen a little bit in the background. Maybe the new wave is privacy violation lawsuits. So we're seeing metapixel lawsuits very prevalent in the healthcare industry the last 6 to 9 months. Yet to be determined where that's headed. I think there's only one sort of major settlement at this point, but they all cost money in terms of legal expenses. And you got a recent settlement in the biometric privacy area in the state of Illinois that could really dramatically change everything. And it's already caused a flood of lawsuits, right? Again, lawyers, flood to it. Let's see if this is the new money maker for us, right? And as with any class action in the U.S., the injured party doesn't get a whole lot out of it. The thousands of people that join a class get a few dollars each. So I think that's something the cyber insurance industry kind of has to make a decision on. It's inconsistent, excluded, partially excluded, covered, underwriting to it, and that piece is really difficult. Figuring out it's you have to go back to the application form approach, which is never ideal. There's no silver bullet technology that can help you determine who's collecting what in an automated way. So I think that's one of the challenges that lie ahead. Somewhat unique to certain industries, but as I was just doing a tour of new office space the other day, all these office buildings were highlighting how amazing it was. You could scan your fingerprint as an access control mechanism, and I'm like, I wouldn't do that if I were you.
So you'd say that there are more uninsurable sectors than others. Maybe Keith could also jump in.
Yeah, so I mean, we definitely see larger risks surrounding certain industries, right? So I mean, there are certain organizations that certainly have a target on their back. I will say though, the threat actors are very opportunistic, right? So as much as we like to think that cyber criminals are out there specifically, intentionally always targeting healthcare companies, financial institutions, critical infrastructure, the reality is the majority of them are just looking for a way into a network and looking to make profit, right? They're just looking to make money. So there is this concept out there of remote access brokers, right? Where you have literally cyber criminals out there who are selling access to businesses. And the buyers of that access, the majority of the time, they don't really care who the victim is. And many times, even seeing the back end of these ransomware attacks, you can tell oftentimes they don't even know who the victim is, right? They deploy ransomware, they have a ransom demand that goes out, and they don't really know who the victim company is or what industry they're part of and things like that. Sometimes they do a little bit better diligence and they realize that they have a really good victim on their hands in terms of some of these attacks, or maybe they get in the process of a data breach. We're able to see, wow, they have a lot of in the US, social security numbers or personal health information. But the threat actors I think they're much more opportunistic than we like to think, especially outside of the nation state attackers, right? The advanced persistent threats, nation state, sometimes they're a little bit more targeted in their attacks. But so certainly, we do see, healthcare, financial institutions, any critical infrastructure, certainly, having a little bit more focus. But, I see just as many organizations that I'm shocked are the victim of cyber attacks as I do ones that I would think would be commonly attacked, right? It's so you can really tell that there's an opportunistic component to all this as well. So that's just sort of talking from the the victim and the claim perspective. I'm sure someone else has a better perspective in terms of insurability, but I'll just kind of make that comment about the threat actor focus on what they're trying to do and being opportunistic.
Are there any geographic differences, Hank?
No, I think from that perspective, probably not so much, because I think if you talk about criminal organizations and not, let's say, the geopolitical climate or nation state crime and warfare, then I think, cyber criminals are opportunistic around the world. Yeah, whether you're in Asia Pacific or in Europe or in the US. So I would agree there that they would look for the easiest way in. And it's like, with burglary in the streets. Yeah, if you have your door open or your window open, it's an easy target. And of course, if you are putting a Van Gogh in your house, then you are a target. Yeah, that requires some more time to break in as well. But I don't think from that perspective there is a major geo difference.
Okay, another question from our audience before we move on to our next topic. Merck's recent legal case shines a light on insurers using active war exclusions. How are insurers getting better at or gaining greater confidence in attribution and being able to accurately use the active war exclusions? Feel free to jump in. Dan.
I'll take a swing, and I'll caveat this that this is Dan's opinion, not maybe not that of my my employer. I think that this is a tricky one. One, I don't know that the insurers aren't necessarily during the incident response. They're counting on their client and the client's resources, whether it's their incident response team, extended firm, law enforcement, to help with attribution. And so I think that's inevitably what happens. I don't know if and maybe some of the insurers out there keep track of threat actors, and they maybe have a profile, and they're aligning who a threat actor is. This one a nation state associated threat actor. So I think that may be how the correlation works on the insurer side. Big picture, I read I think somebody tagged me on a LinkedIn post or something about that Merck case this morning. But a big picture, I'm not crazy about an outright exclusion about it, although I'm not one that has to cover claims. So that's but I understand the insurers may be having some stipulations and limitations on things, but in other world of insurance otherwise, insurers really only get a plain kind of bailout if it's something unusual. So like a flood, if the government declares a disaster, then there's help given to the victims of the flood and the insurance companies to cover things. If a bank gets robbed, some of the funds are insured. Things like that. And so I have kind of mixed feelings, but it's a tough one to get through. And so I'll be very closely following how some of these rulings play out in the future and what the insurer's posture will be.
You mentioned incident response teams. Are they focused on getting the organization back up and running, or simply reducing costs to the insurer? That's also a question from our audience.
I'll take a quick swing and defer to others. To me, if a quick response and recovery equates to lower cost, and so my view is the sooner you can detect, respond, recover, all of those things equal the likelihood of better cost management, and why I think that's probably one of those key factors now that the insurance companies are asking for on clients. Do you test? Do you have an incident response plan? How does that play out?
I agree with that, Dan. Right? Incident response is about how quickly can you get back. So it almost spills into business continuity in DR. The faster we recover, the cheaper it is all around.
Yeah, and I think even before that, so what we see in our client base is that sometimes we get a call that it's not even, to the fact that they're sure that they're being attacked, but there is something strange happening. So if we get early on in that cycle, and help them out, identify what's going on, block the next step in the in the command chain, then you may not even get to the point that you have to recover. So I think, as you say, respond is extremely important. Maybe if you respond quickly, can catch them spot on, I would say, then you might not even need to recover at all. So it's extremely important to work with your client on an ongoing basis, to act fast within an hour's time if possible, and be busy with identifying, is something going on, and if so, can I stop it now?
Be better protected. Okay, and with that, we're moving on to our second topic, challenges and risks. Jacob, what are the key drivers of loss in cyber insurance policies, and what can we expect for the next 12 months?
Yeah, I mean, I think Keith and others did a great job of kind of outlining. So my short answer here is going to be, the percentages haven't changed, right? Ransomware number one, business email compromise number two, data breach number three, and then there's that fourth bucket that may or may not become very expensive in 2 or 3 years when all those lawsuits have been settled, and then that could be number one. We don't know, right?
Keith also mentioned social engineering.
Yeah, well, so that's a tactic that plays into all of them. That's part of the attack vectors. But the outcome being ransomware, fraud, or data breach. But the privacy violations, I think, that's what we consider long tail claims in the industry, liability claims. So they take a while to play out in the different stages of the court system. So that's the challenge of insurance, right? Anything that's long tail, whether that's D&O or any other liability coverage, is you're sitting and waiting when there's a new trend, and you can't really address it before you know if it's going to be good or bad. Whereas we've seen in the last 2 years how quickly has the industry addressed the change with the ransomware wave coming on in 2019, and the ongoing sort of somewhat increase in business email compromise fraud. So I think those are still 1, 2, and 3, and then there's the X factor with the privacy violation lawsuits out there. So that's sort of status quo.
Keith, how many organizations end up actually paying a ransom when experiencing a ransomware attack?
Yeah, so I think this is an area where there's probably good news and bad news. Over the years, we've continued to see, it's around hovers around 50-50, right? Where somewhere around half of insureds, you tend to see them paying ransoms. The numbers industry-wide are all over the place. Some say it's 80%, some say it's 40%, some say 60%. But what we don't see is numbers like 95% or 5%. We know that it's sort of it's one of those situations where it depends, right? If an organization can recover, again, back to recover from solid backups that haven't also been encrypted and maybe were segmented from the rest of the network that was hit, and the backups are adequate, they can get back up and running. But if not, a lot of these companies are facing just unsustainable business interruption, where they can't continue on as a business with downtime of all their systems being down. So they kind of get backed into a corner in which they need to do so. The good news is that I will say industry-wide, I think we've all seen a slow progression in terms of a drop in the number of victim organizations that are paying ransoms. There are a lot of reasons for that. I think, again, one of the most common, though, is it's back to the message getting out that you have to have solid backups. I think that a lot of the noise around these ransomware attacks, at least in the United States, and some of the really high-profile attacks, they were used as an opportunity for some security budgets, right, to sort of throw these attacks on the desk of leadership and say, look, if we get hit by one of these attacks, so that can open up doors, obviously, for budgets for better data backups and security controls and those types of things. So, we've definitely seen that. And in addition to that, again, there's been a lot of global enforcement actions in which a lot of these ransomware groups have been shut down. They've been arrested. They've had servers apprehended. And so, a little bit of that dip in the ransomware activity has also, I think, helped. But I think overall, for now, we continue to see a positive trend of at least a little bit less insureds paying ransoms as opposed to going the other direction, and continue to see more and more victim organizations and companies ending up having to pay these ransoms.
Hank, what are the most difficult areas for organizations to assess their risks?
Yeah, I think that still is in what we call the identifier area. So we use, when we work with our clients, not just to help them to get cyber insurance, but also to set up continuous risk program. We use the NIST framework, and obviously the identify area is the biggest because that's still the most difficult one, is to understand what you have. A lot of organizations are still struggling with that, or are having areas where they don't know. If you look at the amount of infrastructure, the amount of different applications hosted and built by different organizations. So that brings me also onto the supply chain. More and more organizations are not working in isolations. I would say they're working with lots and lots of sister organizations, vendors, partners. And assessing that, and identifying those risks is a big issue. So knowing what you have is one, but then also translating that into your risks, your vulnerabilities, your risks, is something that organizations are still struggling with big time. This counts for large organizations, but obviously also very, very much for SMB organizations.
Thank you. I would also like to thank Peter and Dan, because they have to go in 2 minutes, and ask them if they have a couple words just to wrap up their part of the discussion.
I don't, only just quick note, please always get engaged with your insurance broker and carriers to find out what are the key things to have in place and how you can improve. It's better to, sometimes you're a little shy about wanting to call your insurance company and talk, but I think long run, it can help you a lot, if you will.
I agree with that, Dan. Yeah, the more you involve your broker, because being at a brokerage firm, right, the team that sells our cyber liability policies, they'll come to me often to see what's going on the street. Tell me what you're seeing. What are the other CISOs talking about? So we collaborate a lot. So yeah, talk to your brokers, man, because we're trying to keep our pulse on what's going on so we can help you guys as clients. Absolutely.
Thank you. Thank you, Dan. Thank you, Peter. Unfortunately, we didn't have much time with you, but we really enjoyed every second of it. And moving on to our next question, Keith. How have ransomware attacks and tactics changed over time?
Yeah, so it's been interesting to watch, and many years ago, I was on the other side of this in terms of watching individual consumers being hit with ransomware attacks, right? And that's really where I originally saw it, and I was trying to to help individual consumers who were the victims of these types of attacks. And it's been amazing to see, ransomware attacks that were targeted toward individual consumers' computers for $400, $500, to now we're seeing, 5-digit ransom demands against global corporations and even in the public sector, right? So we've come a long way over the past few years, and not surprisingly, but over kind of the shorter term, the back to sort of some of the drops in the ransomware activity due to some of the global law enforcement actions and some of the different approaches that global law enforcement has taken, and because of the prominence of better backups and those types of things, the ransomware threat actors had to find a way to balance that out with their revenues, right? And one of the approaches that we've continued to see are higher ransom demands, right? So there's sort of a shift, right? So as the frequency and the prevalence of these attacks is high, the ransomware threat actors don't really have to charge as much per ransom demand, right? They can have a high frequency of these attacks at a much lower profitability per attack. If they're only able to sort of get away with one or two or a handful of successful ransomware attacks, then obviously if they want to make the same amount of money, they need to increase the demands. And I think that's really what we've seen. And a lot of the industry reporting out there can show this, right? That there are graphs that are showing average ransom demand going back, from 2019, 2020, and how it has just completely spiked all the way up through and including last year, in terms of the initial ransom demand that these threat actors are making. On the flip side of that, there's been a lot more flexibility, I think, over the years in terms of, these initial ransom demands can be negotiated. And that's why it's so important to, back to incident response, hiring the right firms, or making sure you have the right firms already that you have engaged with to pull in when you experience a ransomware attack, because the right firms can negotiate with threat actors, and we see average anywhere from 60 to 80% drop from a initial ransom demand to a final payment. So a lot of companies out there, they think, okay, I got hit with a $500,000 ransom demand, let's do it, right? Pay them, let's get this done. Whereas they could really be paying a fraction of that. So that's something that's really been important and to offset that. The other sort of area of desperation in terms of these ransomware attacks has been, the threat actors trying to find ways to further entice the victim companies to pay, right? So they have to be much more creative. It used to be lock up a company's systems and they're probably going to pay. Well, for some of the reasons we've all mentioned in terms of why companies are not paying, the threat actors have had to find other more creative ways. So they've moved toward this concept of double extortion or triple extortion, right? Where they'll use one strategy, which is locking up all your systems. And then I think we talked about earlier, they'll also couple that with a data breach, where they'll take all of your sensitive information, information about your customers, your employees, your intellectual property, and they'll say, hey, even if you don't want to pay us for the locking up of your systems, if you do not pay us, we will post all this private information from your company publicly. So either way, you better pay up, right? And then back to Hank's point about DDoS, there's this triple extortion now, where some of these threat actors are now saying, if you don't pay me for locking up your systems and leaking your data, we're going to hit you with a DDoS attack, and we'll just take out your website, and you're going to be out of business anyways for a few days while your website's down. So, it's really backs a lot of these companies into a corner in terms of really trying to figure out whether to pay or not pay. Someone said earlier, there's certainly times when you definitely shouldn't pay, and especially around some of the data breach portions of ransomware attacks. But either way, I think that's really what we've seen is there's been a lot of creativity around these ransomware attacks, going from, again, what used to be a very simple consumer target-based ransomware attack. Now we're all the way to these multiple extortion tactic types of attacks these days.
Glauco, I think you're the perfect person to answer this question from the audience. How do you demonstrate to your insurer that the cybersecurity tools and processes you have are adequate? And how can this be measured?
Yeah, this is a challenge not to show just to the insurer, but to show to the company, to the board, and that's where they all are talking with us about that. And in my experience here at the insurers, they made assessments. They're using tools like Security Scorecard, BitSights, and other ones that measure our external maturity. And they made assessments. They made conversations with us. So we have to be ready to show them what we are doing internally, our plan, our goals, what we are achieving on the next side. We have to create this type of report to show them, to show to the board all the time. So we have, but you have to create some kind of pattern to not create some mess or change every presentation or every time that someone will have to show to someone your maturity level in a different way. So you have to have a standard using a framework, a pattern like NIST or ISO or whatever you want to use. Use one, choose one, and go with them for long, because you have to create this pattern and if you do that, you'll be able to show that your maturity is growing. That's what we're working for. And it's hard to have this conversation not with the insurer but with the board, and mixing both, because we are showing them the maturity is growing, yeah, but the premiums of the cyber insurance is growing also. So why? That's the question that we facing a lot when we mix both of them. But I really think that they have tools to show to measure us in a really good perspective, using the assessments and using the tools of the risk tools to measure external policies that have they give us a really good perspective of your maturity. But you have to be ready to show them your plan, show them your metrics, how do you measure, and the indicators that you can show to the board, to the insurer. Give the trust, show them that you're ready to be open to listen from him, and show them the infos, the real infos, not just to have the insurance. Because if you made that, if you need and you need the insurance in the future, maybe you are not able to get the help from them. So you have to be fair in this kind of conversation and answering the assessments in an honest way. So I think that this is a good approach to have this conversation.
Yeah, I fully agree. And sorry, Moran. I think what is important also in my experience, helping out, organizations and customers in the conversations with, the brokers and the insurers, is show that you're in control, show that you know what you're doing, have the evidence to, beyond it, to show, on the different categories and topics that you have things under control, that you're working on it, that you have a plan, a roadmap. And I think if you can do that, and it's with like, any other assessment, I would say, then you can get a great rating. And with a great rating, you get, a low premium, hopefully.
Now we're moving on to our final topic of the day, solutions and approaches. And Adam, I would like to ask you, how is the cyber insurance industry aligning with the cybersecurity industry to progress cyber resilience?
Yeah, it's a good segue, I think, to the topic we just mentioned, and I alluded to it earlier. I mean, you've seen this in play with a lot of the cyber MGAs where they partner up with cybersecurity companies. So there's kind of two flavors of this. There are those that partner with them really as a solution reseller, right? And it's kind of a panel that they have. So if, especially with small, mid-sized companies, don't have either access to or the availability of these resources, now it can help close the insurability gap by saying, hey, if you don't have an MFA vendor, right, you might not be insurable now. We have a list of preferred vendors that you can use and preferably get a discounted rate because of that relationship, what that might look like. And then there is more of the data providers and something that might be more tightly integrated, right? Where it's now looking at how you can leverage data effectively, how you can get access to data, where does that data reside, and how do you integrate that and embed that in the customer journey so that it becomes part of the embedded process. And I think that's what we're evolving towards, and where we need to really as an industry to get to that point, because now you're also going to be getting access to inside out data. So looking at more of the endpoint detection vendors and looking at MDR and XDR solutions beyond just the MFA. But it really does start with the controls. What are you measuring against? But how do you want to use that data and how do you want to leverage that? So the good news is I think you've seen that evolution kind of occur where it's gotten beyond just the referral play, because I think a lot left to be desired within that. But now it's more of a technology play. And it's also being able to work with vendors that the customers are currently using, right? So that you have the APIs, you have the connectors, you have the translation mechanisms to ingest and harvest the existing data and do that mapping and translation for insurance coverages and perils. That's what we're working on. I think that's what the industry needs to get to. So now there's alignment between the insurance, the brokers, and the data that they're gathering, the education piece, and now working with the carriers on the back end of that insurance value chain. So you're connecting the dots and you're also translating the languages so that the carriers who have their own applications, their own questions, their own coverage forms, you can now start speaking the same language. So I think that's where there's a big opportunity, is starting to create standards between the cybersecurity sector and the insurance sector to help drive this forward. Nobody's going to be able to do this in a vacuum, and nobody's going to be able to do it without the collaboration and coordination with the others. So I see that's where this is going to evolve and how it can be used effectively.
But it's kind of a paradigm shift. Like
Big time.
Creating standards.
Yeah.
Are there any standards currently in place?
There are very few. You've seen some consortiums with cloud providers and things like that, but no, as far as a translating mechanism and looking at insurability, there are no common forms translations between security frameworks, and Hank mentioned NIST and ISO and CIS and some of these other ones. No, they don't really exist, and that's part of the problem. We're still in this wild west, akin to 1995 internet, era, where it's just everything is just kind of out there. You can't really make sense of it yet. You know that the websites are out there. You need to have an internet presence. I don't really know what that means, so we're kind of in that phase. We're slowly coming, out of that, but we're still in this kind of wild west where, right, there's no standardizations in coverages, interpretation of coverages, interpretation of security data, how to characterize data, and how to use that effectively with insurance. And I think that's where that gap exists. So, up till fairly recently, the insurers have been really dependent upon the cybersecurity companies and consulting firms to bring in this data and help them understand what it means. The insurance industry needs to evolve and take it upon itself now to bring some of this function in-house, so you can do that mapping and translation to help create these sort of standards. And of course, I think regulations and the governmental backdrops need to play a part of this as well to help drive these standards to market. And I think you're seeing a slow roll of that evolution there. But as Jacob mentioned, data privacy and a lot of things that are happening with the US government, with the SEC, and whether there should be a backstop. So the conversations are really starting to pick up, but whether or not there's any credence behind it or any leverage, I don't think we're there yet. But I think it's becoming much more of a real conversation in the light of the SolarWinds and the Colonial Pipelines and the JBSs, to realize that systemic risk is real. It's not just something that's, it's not a Hollywood movie anymore. This isn't sci-fi. This is legitimate stuff. And Keith mentioned, the cyber criminals and the bad actors can evolve much quicker than we can react. That's a fact. So you're never going to truly be able to keep pace. We need to be agile and flexible enough to just be able to absorb, right? And it's almost a bend, don't break, but it's going to take, a village to get this thing really up and running. And so, but the insurance industry as a whole needs to do more to help drive some of these standards forward, to help, to help drive some of these solutions.
Yeah.
Yeah,
Who do you
and
think? Yeah.
and Adam, I think we can help as a cybersecurity industry to give you automated tools to do that. I think this is an important area as well, is because if you need to use all the kind of different tools that exist to
Absolutely.
get assessment and then dashboard it, it's again it's a huge effort, and then you won't be able to do that. So I think this is where we're working on, and where we can really help to bridge that gap.
Yeah, absolutely. And I think the customer journey piece is one of the most critical areas for innovation that needs to be dealt with within that realm, because all the tech exists. It's not a matter that we don't have the technology out there, right? And it continues to gain pace as well. But it's how do you integrate that into a customer journey? How do you create not yet another tool for security teams to have to use, right? So how do you kind of embed them in either existing platforms or just via API, just absorb a lot of that data and being able to use it into something tangible, right? And something really value driven. I think that'll be a challenge, but
you
agreed.
said internet in 1995, and how many years did it take us to have GDPR?
Quite some time afterwards. What was that? 2015? I want to say 15, 16, somewhere around there, maybe 17, but yes. So of course it's going to take some time. But the problem is that time isn't on our side, because the cyber criminals aren't going to, sit on the sidelines just kind of waiting and saying, okay, that sounds great. There will always be another flavor. There's another fad of the day, right? That they'll come up with. And I think Keith highlighted that very well with ransomware, just as an example, right? There's always going to be an evolution with that. So you need to be flexible enough to be able to take in that change really and just adapt to that. And so the frameworks need to be established. Regulation needs to be able to get behind it, as far as standardization. Certifications would be great for companies, right, with regard to ratings themselves, and how we use those. And whether it's also standardization of risk assessments, just general mappings of risk assessments to insurance coverages. So I think a lot of the examples are out there. I think it's just time for the insurance industry to kind of accelerate some of the adoption of what currently exists, and then continue to innovate as well.
Keith, what can insurers do to help reduce their commercial customers' cyber risks?
Yeah, and I think Adam, covered some of these, but I think one area that carriers can help a lot is, I think back to kind of the very beginning, and when we were talking about what are the most common types of attacks. We're talking about ransomware, data breach, business email compromise, and then also identifying what are the most common attack vectors that these cyber criminals are using for these attacks, right? Because individual companies, they often don't know that information, right? They're just one company. Their perspective is completely limited to any attacks that they've experienced, and so depending on the perspectives of any of the security firms that they're working with, and depending on their carrier, can be very helpful in highlighting. So for example, we tend to see with ransomware, right? There's really only 3 attack vectors that we see that are extremely prevalent, and everything sort of is an afterthought. So we see remote desktop protocol being exploited as sort of an open port, in which either it's not secured correctly, or there's a brute force attack against remote desktop protocol. There are stolen credentials that are sold, or it's default passwords, right? Where you're literally able to just remote right into a network with password, a username admin, password admin, things like that, right? Another one is back to phishing, social engineering, right? So training your employees, and then the emergence the past couple of years, especially a couple of years ago, of security vulnerabilities, right? And sort of not patching, or at least not patching systems quick enough as severe critical vulnerabilities come out. So carriers can certainly help, especially even if it's just at the initial application for cyber insurance or at renewal. A lot of the questions that are being asked are for a reason. We're asking those questions because these are the common types of attacks that we tend to see. But yeah, and I'd say, RDP, we talked about multi-factor authentication is another big one in which I think all carriers out there are really pushing on deploying multi-factor authentication. We talked earlier about backups, having, daily, very frequent backups, storing backups, offline, ensuring that backups are encrypted, segmenting backups from the rest of the network. So if the bad guys get in, they're not able to kind of move laterally and access those backups. Segmenting the network, things just, again, not allowing the bad actors to move easily throughout the network. And then again, the social engineering training, the security awareness training for employees. Always, going to probably be the weakest link in any chain of controls that you have is going to be, the hands-on, the keyboards, the people using systems. So making sure that your employees have some sort of training to understand security. So, I think there's a lot of visibility that's, the security firms out there and carriers are able to provide to insureds to try to help them out. There's so much out there you can do. There's so many types of attacks. But if we literally just all sort of focused in on, again, what are the most common attacks, common attack vectors, and sort of the top 5 to 10 controls to have in place, you're looking at a very high percentage of success in preventing a lot of those attacks just based on the prevalence of the attacks that we see.
Glauco?
Well, I think, what can I answer that? But it's really hard on our side to take this kind of approach. We have a bunch of infos, a bunch of stuff to work, and keep talking about the ransomware that they follow the same path. So if the companies can have the ability to take a look on that, it will help us a lot to create this baseline to solve more of, so not solve, but to be ready for the most common issues and the most common type of attacks. So this is bringing a lot of resilience to us. But most of the companies don't have this kind of information. They try to implement all the MITRE attack prevention for everything, the market defense. So it's kind of big. So you must choose the battles that you must face. You must understand from your business, understand your infrastructure, the real crown jewels for you, and apply the controls on that. So, but starting a point where that is more tangible than doing everything. So I really don't believe on that. I believe that you must choose the battles and choose what you're able to do to bring value to the business. So this is a really good path for us, and I talk about this along with a friend. So it's not a battle that we can implement everything. So you have to trust in something, trust in good partners. There's a bunch of companies in the market that can help us to give this view, give this information, and help us to apply that on our environment.
A question from our audience. Most of the mid-sized businesses have a very static insurance policy underwritten at the beginning of the policy year. So what would be material changes that they should inform the insurers immediately? Jacob, I think you could answer that.
Hopefully I can answer it. And yeah, it's a challenge. People acquire new assets. I'm not talking about necessarily acquiring a new company, new subsidiary, but people acquire subsidiaries too during the policy period, and the policy addresses that up to a certain extent. You can acquire within a certain threshold. So there's a lot we might not know about that happens in those 12 months, and it really highlights the challenge of sort of the 12 months policy periods and what goes on in between. And I think a good part of the insurance industry is still only looking at the attack surface, the exposure around new renewal time, and then revisit again in 12 months. And I think Adam's brought us up very thorough description of which direction the market's headed in. You've got the InsurTechs. We're a firm believer in the active monitoring approach. So we keep an eye on our insureds in a friendly way throughout the policy period. And so when new assets may be added, and if they come with certain vulnerabilities, then we detect it, we alert them, and most of the time they respond back and say thank you. We hadn't found that ourselves. I think that's it's a pretty common issue, is you don't know all of your attack surface. But the other two things I want to highlight, just in relation to what was being discussed, because it's been covered thoroughly, I would say there's one sort of pretty big difference. All of this works pretty well with small companies. The larger the organization, the less success you're going to have with active monitoring and whatever you're doing, because it gets more and more complicated as an infrastructure, and you're going to miss something. And if it's like, oh, you're missing this control, well, I think larger companies aren't that responsive to those sorts of comments. So, I think insurance industry's come a long way in the small mid-sized space. I think there's a lot of work to do in the larger account space. But it's good. Always need to have something to focus on and improve on, right? But I think for now we've done pretty well.
So I think we covered this already, but this is a question that I saw from different people on our Q&A. So maybe just to sum up the discussion, how do we secure ourselves? How do we protect ourselves? Is there a combination of physical assets or cloud security solutions or other cybersecurity solutions? I think people, most of our attendees would like to hear more about how to protect themselves, and I think this will be a good bottom line for this discussion, as we have to we only have 3 minutes, so we have to say
it's a good way to finish. My comment's going to be, when you're an individual company, you just can't know as much as an insurance company, insurance broker, a cybersecurity firm that has a macro level view of what's trending right now. So and it goes back to the customer view as well, right? Don't secure everything, because you can probably catch 90% by focusing on a handful of things. And I think the insurance carriers have the loss data and the forensic reports that point to the attack vectors to prove what's happening right now. It doesn't mean that's happening in 12 months, but what's happening right now. So I think that collaboration is very important, probably more important than any individual tool in itself.
Yeah. Great answer, Jacob. I would say this, regardless of company size, you need to look at a cyber resilience strategy, and both risk services, risk advisory services, your security products have to be married against risk transfer. And it's not a question of one or the other. You need to consider both, because one will really give you the backstops and the financial protection, and truly being able to understand what's in those coverages and policies and working closely with your broker will really help you on the other side with what side of security that you really need. So I would say it's not an either or, especially for small, mid-sized companies. You have to contemplate both. I know it's much easier said than done for real small companies in the face of larger insurance premiums. But also, I mean, the insurability gap that exists. There are a lot of companies that are not insurable because they don't have the basic controls in place and the basic mechanism. So get your basic cyber hygiene in order, get your house in order, work with your brokers to understand where those gaps are to ensure that you have insurability, that you're in the game and you have that as an option. Because the most difficult situations are obviously for the number of small companies that go out of business because they just cannot rebound from the financial losses that stem from pretty basic attacks, and basic cyber hygiene will thwart the majority of these attacks. And of course, nobody will be completely safe from that, but there are basic steps that can be taken. And so, my advice would be, look at cyber resilience collectively between risk transfer and risk advisory, and what you can do to get your basic cyber hygiene in place, and work with a broker to either get insurability, or if you have it, make sure that you've got adequate coverage.
Yeah, maybe to add to that, I think it's all right. And I mentioned the identify is the most important thing, because you need to protect what is valuable to you. And I think there are solutions out there now that you can also look at protecting your real crown jewels to a little bit more higher way than maybe the others. So I think that's an area. We covered the forensics and incident response. It's extremely important to have that, ready for you and an ongoing basis. And it was earlier mentioned as well, having management do a tabletop exercise so that you're prepared for in case something happens, that everybody knows what his role is, how to act. Those are things that can help you a lot as well.
Glauco?
Yes, sir. So they talk a lot of good things, cyber hygiene, knowing the crown jewels, create a response plan, and I can add on that the recovery plan. So it's really important to the companies, depending on it doesn't matter the size of them, know how to came back from a big ransomware attack, for example. So focus on that, and if you get this potpourri of informations, what all here we're talking about, and put together, we will have a really good conversation with your broker and the insurer. So adding that, focus on recovery. That's my final thought on that.
Perfect. I would like to thank you everyone for your vast insights and for a really wonderful discussion. These were all super fascinating topics related to emerging security challenges, and I'm glad we got the time to cover them today together. Thank you to our speakers, Henk van der Heijden, Dan Bowden, Jacob Ingerslev, Glauco Sampaio, Peter Osorio, Adam Gladstone, and Keith Tagliaferri. We look forward to hosting many more discussions like these in the future. To stay up to date on upcoming webinars, follow Hub Security on LinkedIn. Thank you so much, everyone. See you next time.
Thank you.
Thank you.
Bye-bye.